Hello friends, welcome to another video of TradeLikeFxmakk. This video we are going to discuss about market structure. So basically I had covered market structure in the TTS series first video, but this was an on-demand video. See, you can see this message I had all time frame market structure because sometimes monthly is bullish, so I had a request on my Telegram to make a video on market structure in depth, due to which I am making this video. If any one of you want videos on any of the topics, you can join my Telegram channel and my community, and you can message me over there, and might as well you can comment in the comment section, so I will create a video on it later on. So now let's first try to understand what the question says. Okay, all time frame market structure, because sometimes monthly is bullish, weekly is bearish, daily is bearish, so we have two time frames bearish, that is weekly and daily. 4 hour is bullish and 1 hour is bearish, 30-minute bullish. First of all, a scenario like this is like it's very unlikely to trade in such scenarios, because first of all, if you have so many time frames which you are looking at, and every time frame, like every alternate time frame is showing something else, then that's a issue. Because see, if the weekly and daily is in sync, the 4 hour is bullish, yeah, okay, that's fine. If the 1 hour is bearish and 30-minute is bullish, it's likely that if the 1 hour is bearish and the 30-minute is bullish, so the 30-minute has shifted structure right now. It was bearish and it has turned bullish, so that's very well. Like, you cannot be, see, you have to first of all clear two things. So in this video we are going to focus on that. Now what we have is, we have two sections. Okay, we are going to discuss them in this video. So what he is trying to say is that he wants to combine everything together. That doesn't work. There are two titles. First is your strategy and second will be your entry. Now according to what the message says, see, we use higher time frames for the bias or the strategy, whatever you call it, it's up to you. Okay, so now here what I see is the monthly is bullish, weekly is bearish and daily is bearish. Now if first of all, I don't see monthly candles a lot, I only see the monthly candle at the closing of the month, that too if it is required. It's like I don't see the monthly candle too much, but still breaking that down. So we have sector over here, we have the monthly, second the daily, and third the 4 hour. This we are using for bias. Oh sorry, I forgot the weekly. Okay, so second will be the weekly, yeah, third will be the daily, and fourth will be the 4 hour. Okay, so we have these higher time frames. Now first of all, I do not use the monthly time frame, because see, you also have to understand that how long lasting your trade is. Now if you are looking at monthly time frame, let me put this aside. If you are looking at monthly time frame, weekly time frame, daily time frame, and you are entering based off 1 minute entry time frame, 15-minute entry time frame, like, then how the hell and why the hell are you looking at monthly time frame? You understand, because while you punch a trade on 15-minute time frame, how long will it go? Like, it will go for a couple of hours, that's it. So why do you want to look at the monthly time frame? That is the game. See, you have to understand your execution and how long you are willing to hold the trade. Now for your entry confidence, what he said is, he said the 1 hour time frame and the 30-minute time frame. Okay, so these both he used for the entry. Now the question over here is that if you are entering on 1 hour and 30 minutes, then how long will the trade go? Let's say even if it goes for 1 day, then why are you looking at the monthly? Monthly is for the swing traders. Yeah, sometimes you can look at monthly just as an extra confirmation. You don't have to look at first and build your bias based off it. Now right now I'm going to exactly tell you that what exactly you have to look for in each time frame. So let me remove this question first of all. I have answered the question till now. Now I'm going to show you what exactly is my process and how I do it. Okay, so I have the 15-minute time frame and the 5-minute time frame too, and I don't use the monthly time frame. Still I'll keep it just to show you that how the monthly time frame can help you. So this is the strategy and entry. Okay, now let's look at examples. So let's look here on JBP. Here you can see the weekly is very well bearish, the daily is very well, the daily is bullish. Yes guys, the daily is bullish between the structure point. Daily is bullish between this, and the weekly is bearish. Now tell me, in such a scenario, you seeing the monthly time frame doesn't make any sense, right? Because see here, what is the monthly time frame showing you? The monthly time frame is showing you that we are currently selling, but the previous month was a doji. So based off this doji, we don't wish to sell anymore. But you just see this small move over here. The small move, which doesn't even matter on monthly time frame, can hit your take profits in the 1 hour time frame. See how big huge move it is. So when you enter the 1 hour time frame and the monthly is not even a wick, then why do you want to see the monthly time frame? Now see how the monthly time frame can benefit you. Here you can see that I had this AOI, area of interest, drawn based off the weekly time frame. Now here when you go on the monthly, you can see how it aligns very much with the monthly time frame also. It is a very strong level on monthly time frame. So that is one plus point that you can make, and only the previous candle. If you want to see the monthly time frame, that's all you see. That is the data which is required on the monthly time frame. Moving on to the weekly time frame, you can use the weekly time frame to draw areas. And what I personally used to do was I used to look at the trend. Beforehand, what I used to do is I used to look at the trend on the weekly, but now I have changed that approach a little bit. Because see, even if the overall trend is bearish, sometimes the area and sometimes what previously has happened is more important. Like here you can see that overall trend is bearish. We are bearish between the structure, but you can see we have been bearish from a very long time. But you can see that we have been rejecting this area from a very long time, from past 1, 2, 3, 4 weeks, and then we had a superb engulfing candle too. We had 2 more weeks, but this was also a rejecting candle. This was also a rejection candle. Then we saw 1 week. Now this what I would consider as manipulation. Here I would go on with the daily time frame. See, the daily is bullish. Okay, the daily is bullish, but also on daily, when you see the trend on daily, right? But now you have to wait for a confirmation on daily too. See, this would have been a good confirmation. This is a bullish engulfing candle. So the next day taking a trade here would have made sense, but taking a trade over here doesn't make any sense. So you have to wait for confirmations too on daily. The trend, see, the trend used to work in good old days because the market structure was very clear. Nowadays the market structure is not that clear. So that is one of the reasons that emphasizing too much on the trend is like a little bit harmful for your trading, because you have to see what is happening currently. That is very important, because you know that news are changing throughout the globe in like just a couple of hours. Then why do you want to see weeks back, days back? That is what is happening right now. The recent data holds more value than the past data. So based off this, what we would be waiting for is we would be waiting for a break and retest above, okay, on the bullish, on the 4 hour thing. Now on the daily, sorry, now on the 4 hour. On the 4 hour here you can see that we are also bearish. We are also bearish on the 4 hour. So the same thing, the same rule applies over here. We'll wait for a break and retest to buy. That is how you analyze, that is how you see market structure. Now one more thing, a very key thing which I'm telling you all is that one thing which I have integrated a lot in my trading is that looking at the move. See, looking at the move, what does it mean? You can see on the weekly time frame we had such a huge fall. Now is this much pullback enough to move further down? Is it? You ask yourself. It is not. We need a deeper retracement, at least till this structure. See, we still have this area over here which is remaining to be retest. So we can expect a pullback till here. Now what we can do is, seeing these confluences, seeing this candle close below, inviting all the sellers. Now what we can do is go on the daily, wait for our confirmations to go long and buy. That is how multi-time frame analysis is done. This is your playbook. Like, you have to understand what you have to see in everything. Let's break that down first. On monthly, what we'll see, we would see our previous candle. On weekly, what we would see, trend slash previous candle. Also in weekly, I would like to say that more than trend, emphasize on previous candle. It is more important than trend. Trend slash previous 3 to 4 candles. Now here what do we mean by previous 3 to 4 candles? The example which we took over here. See, a rejecting candle, then this engulfing candle. Like the last 3 to 4 days price action is telling me that we want to go bullish, we are rejecting this area. That is what I mean. So that is one plus point. And the 4 hour we'll see the trend. That is how multi-time frame analysis, that is how I form my bias. This is the exact playbook. Like this has changed my trading in 2026. What I used to do is, I used to just look at trend on all the time frames. That is not sufficient. That is not sufficient. Even if you tell me that in this case you want to sell because the weekly is bearish, and even if for example purposes consider that daily was bearish and you told me to sell, I would still have not sold in this market. Why? Because we are at a key level, and the previous weekly candles over here are telling me that we are rejecting this place constantly. The daily is trying to say that yes, we are rejecting this place, we are forming engulfings. So it is a sign to wait to go in the correct direction. That is what I mean. Now let's see what we look for in entry. Now this I wouldn't break in detail right now. I'm going to create a separate video on my entry because I have modified many things in my entry which has changed my trading a lot in 2026. Like, it literally took me from a average month to an extraordinary month. Yes, I'm not talking about 1 month, but the results. I usually check my results on monthly basis, that how I'm performing. So monthly, quarterly and half a year. So that is how I check my results. Now here what I right now would say, on the 1 hour look at the trend, on 30-minute look at the trend. See, everywhere here what you have to do is you have to look at the trend and you have to look at the trend slash shift of structure for everyone. Now what does this exactly mean? So let's break it down. Let's go on the 1 hour chart over here itself and let's see. Now once you can see that, for example purposes, just consider that the chart has begun from here and the chart is currently bullish. Okay, for example purposes only. Now we see that the 1 hour has gone bearish. Okay, the 1 hour has, this candle has closed below and this candle has taken us bearish. This candle over here we have went bearish. Now we go on the 30-minute to see what has happened. See, the same move over here, we have this high and we would consider this low. So on the 30-minute we would get an entry over here only. Now going on the 15-minute. Okay, wait, we'll mark the 30-minute entry too. Wait, first listen everything carefully, then only make your conclusions. Listen to it. Listen to what I'm trying to explain over here. On the 15 minute, where would have you got your entry confluence? Somewhere around here, on this candle itself, on the shift of structure, on this candle itself. But let's say that you waited for the retest, so somewhere over here you had got your confirmation, and on 5 minutes you would have got it somewhere even further above or something. But the thing which matters is that you do not have to combine everything. You have to select for yourself that what you would like to see. That, see, if you are looking for the trend on the 1 hour, then you look for the engulfing or the entry confirmation on another time frame. That is how it is done. See, if you are if I personally, if you would tell me to make an entry over here in this scenario, let's see, let's break it down. So this was our uptrend, okay, this changed structure over here. See, now what I usually see is on the 1 hour I see the previous candle, like I see the engulfing or the rejection candle on the 1 hour, and I look for the entry confirm, the shift of structure on the 30 minutes. So the 30 minute was already bearish at that time. See, the 30 minute was already bearish. Like on the 30 minute we would have got entry somewhere above only, but we did not get the entry. Okay, fine. So when the 1 hour went bearish, that is where I would enter. That's simple. On the closing of this candle I would enter. That is as simple as that. See, what I'm trying to explain is, don't mix up your confluences. Now here you know very well what to look at on what time frame. On this, actually this over here is the game. The higher time frames is the game. The lower time frames is like just for an entry purpose. And if you identify the game over here, if you know everything correctly, then entering and keeping stop loss based on higher time frame will like always work. You will not need that precise sniper entry. That is the main thing over here. So even if you wait for the 1 hour, even if you wait for the 30 minute, 15 minute, 5 minute, whatever you feel clear, whatever looks clear to you, select any two of these time frames. Wait for an engulfing on one of the time frames, wait for the shift of structure on another time frames. See, the engulfing one should look very clear. Now, even if what I have done is, I have waited for an engulfing on the 1 hour, because till the shift of structure comes on the 1 hour, it's already pretty late. So sometimes I do enter just on the shift of structure on the 30 minute too. That is fair enough, but combine that with the 1 hour candle is what gives you the strength. That is what I am trying to show you. So this is how multi-timeframe analysis is done. This is how it is done. So it is not random. It is not that I just opened the monthly time frame, I did it. Now let's take one more example. Let's take Euro EUD. Maybe let's see Euro EUD. Okay, so okay, I have an area over here also. See, let's see, how do we start? We go on the weekly. We see weekly has a push. Weekly is bearish right now. Okay, fine. Now we go to the daily. We see that the daily is bullish right now, but the daily is rejecting the zone. We are below the zone. The daily is always rejecting the zone, so I will look for sells. You are right, because see, the higher time frame, the weekly is bearish. The daily data is telling me that we are constantly rejecting this area, and this shows me a strong bearish move. So if in current scenario you would ask me what would I do, I would not consider this bullish trend entirely. I would see that is a plus point. This would not be an A plus setup, but it is okay for me. See, grade your setups accordingly. It is very important. This would not be an A plus setup, but this would be a defined setup. Why? Because you can see this place is getting rejected very well. When it touched the zone again on the retest, it got rejected. So what I would expect is a retest, a pullback somewhere around this minor daily area of interest to then sell further. Somewhat like that can be expected. So this is just to explain you time frames and how it's done. Now moving on to the 4 hour. You can see that the 4 hour, we can clearly see that we are bearish. We are making lower lows. Now what exactly is the role of the monthly time frame? After everything is done, I'll come here and I'll see, oh wow, the AOI which I drew on the weekly time frame is going very well with the monthly time frame, but what I see is the previous monthly candle is a very strong hammer candle. You can see that we have been in a downtrend from very long. Here also we have been in a downtrend from very long. Then what I would want is that I would wait for the trend to change. We would wait for this rejections to get engulfed. We would wait for a closing above, a retest to then buy. The monthly is showing me the strong hammer candle. The weekly is telling me that the trend is now getting exhausted. We are too down and we have not got a healthy retest till now. And the daily is telling me that we are rejecting this zone. So we need to wait for a closing above this zone. We have to then wait for engulfing candle on the daily to then enter. Like, this is a master class for you guys. This video is so valuable. I can't tell you, because understanding structure, like nowadays what it has happened is that we play with things as theoretical as we can. Like, we want textbook definitions. We see it as this perfect highs and lows. Market doesn't work like that. It doesn't work in perfect highs and lows. You have to understand the dynamics that I just don't have to see the trend, because somewhere or the other, if I open the monthly time frame, see here you can see that the monthly trend, even I can consider between this and between this as bullish. See, very well. Then I could have never sold above over here. I could have never capitalized off this entire trend. Yeah, see, very well, fair enough. You can see on the weekly time frame also, you could have never capitalized off this selling if you would have been very strict. Because see, when here over here, you can see that the weekly has created an engulfing candle, a strong engulfing candle, and you see that the weekly is bullish, so I won't take a sell. You just see how many weeks far it is. This is literally 24th November of 2025, and this is literally March. It's a difference of months. Then why would you consider that? That is the main thing. You don't have to go mad behind the structure point, that you don't see the information which is right in front of you over here. That is what I'm trying to explain you. So hopefully you have understood this concept very well, that multi-time frame analysis is like that. Now waiting for entry confluences. Let's see till where did we see. We saw till the 4 hour. Okay, now moving on deeply in what I would have been waiting. See, like this engulfing candle, this is a very superb example. But now what usually happens is, on these huge moves we usually get pullback, and this must have been a news or something maybe. Here you can also see, for example purposes only, if this was my area of interest, I cannot be entering long positions over here, right? Like, how big would my SL be? So that you have to make things make sense. I'm repeating it, you have to make things make sense. That is what trading is. You have to make things make sense. That is what trading is. You have to understand the data. It is not some hardcore theory that you have to come and apply over here. You have to understand what is being presented in front of you. That is what it is. So you have to make things make sense. That is all about it. See, entering over here doesn't make sense. Your risk reward is very poor. So what you wait for is, you wait for it to give a retest. Here you can see you had a good engulfing candle. Here you could have entered. That is how you actually work in the markets. This was for the 1 hour time frame. Now this was an candlestick. Let's see on 30-minute time frame. On the 30-minute time frame, that's the same damn thing actually. We did not get a shift of structure here before the engulfing on the 1 hour. So this would only have been the entry, like after this big engulfing candle, the retest and the engulfing over here on the 1 hour time frame. That would have been the entry if we were to plan a bullish trade. This was for example purposes, right? And we drew an example AOI also over here. So that was for example purposes. Now the 15-minute time frame is very important for trailing. Yes, I always trail my profits. I do not have like a hardcore take profit, I do close my positions partially on those take profits and on other levels too, which we would discuss in further videos. This is a very important market structure video, and I hope you have understood that clearly. Let's go on to our notes which we made over here. See, I hope this is very clear to you. I hope this is extremely clear, because this is the foundation for trading. This is actually what it is. Market structure and depth. Yeah. Now if you do not have this clear, then we cannot move further on the detailings of the strategy. You have to first understand this. We do not play based off hardcore theories. We play based off what data is being presented to us. That is the game over here. So the video has already been too long. I had covered it in very short on the TTS strategy 1 video, because I did not think that market structure would be that a great important topic to be taught in depth. But in 2026 I learned that you cannot neglect anything. Like, market structure played such an important role in 2026. This is all it. You notice how in the entire video I did not talk too much about higher highs, higher lows, lower highs, lower lows. No, that information, that is not required. Like, it is just, you guys already know that. YouTubers who are going through the same thing again and again, like, they don't need to tell that. You already know that. What you need to know is this. You know what the trend is. You know how to identify the trend. You need to know what this is. You have to understand on what time frame should I look for previous candles, on what time frame should I look for previous 2-3 candles, and why should I sometimes ignore the trend also and see the previous 2-3 candles. A very good example would be currently in Euro USD. Let's go there. Okay, come on. Here you can see on Euro USD. Currently, here you can see I am planning for sells over here. Doesn't make any sense. See, daily is very strongly bullish. The 4-hour, okay, the 4-hour is bearish over here, but you see the daily is bullish. The daily is very strongly bullish, but here you can see this rejection over here. That is very strong rejection. So that is what I am trying to explain. That is the playbook for you. Here you have it. Here, that is the playbook for you. The strategy which I have, this identifying the bias and your entry. So the video has already been too long to explain market structure, but hope you would never require another video for market structure. And guys, I'm actually not that active on YouTube, because I need some time to plan the video and like to make the videos. I do not have what do you say, that tech savvy environment. Like, I'm not that well versed with the video editing and everything. I actually I would love to keep it what do you say, real. I don't have that habit of cropping things, of editing, putting background music, and that everything is just to play with your mind, guys. The trading space has been so corrupted nowadays that I can't even tell you that what your influencers do to manipulate you guys. So I'll just keep it real. I just think of a topic to talk, think of a topic to discuss. I open the video and I create videos based off it. But due to my schedule, I cannot be that active on YouTube. So I have a Telegram channel on which I update almost daily. So you can join the Telegram channel. The link is in description. I'll attach it in the pinned comment as well. And do comment if you have any doubts, any questions, or any topics on which you want videos to be discussed. Thank you. That's it for this video. FXmakk on the site.